In this presentation, we will work multiple choice questions related to governmental accounting, going through the questions and then practicing test-taking skills with them. First question, equipment acquired years ago by a special revenue fund at a cost of $50,000 is sold for $20,000 cash. Accumulated depreciation of $35,000 exists. A journal entry in the Governmental Activities Journal does not include, so which one does it not include? Either A, a debit to cash, $20,000. B, a debit to accumulated depreciation, $35,000. C, a credit to equipment, $50,000. Or D, a credit to other financing sources, $5,000. Let's go through this again using the process of elimination. Equipment acquired years ago by a special revenue fund, so it was acquired by the special revenue fund at a cost of $50,000, is sold for $20,000 cash. Accumulated depreciation of $35,000 exists. Journal entry in the Governmental Activities Journal does not include which of the following. So when you think about something like this, you want to think, okay, first, what type of fund are we talking about? The government-wide type of activities, or are we talking about funds? Now, you'll note it's a little tricky because it was purchased a while back in the special revenue funds. So you're thinking, all right, there's a special revenue fund. But then it says down here that we're going to journal entry in the Governmental Activities Journal. That's going to be the government-wide journal, activities journal. So now we're thinking, okay, we're on the government-wide level. We're dealing with something that's going to be equipment, which is typically a long-term asset, something that would be recorded on the government-wide level, not recorded on modified accrual, as is the special revenue fund. So we're in the government-wide, so it's going to be on there. So we would think this journal entry would be normal, kind of as we would think of a transaction under normal accrual accounting. So therefore, we could go through these. Now, you might want to actually write down what's going to be the normal transaction if we sold something. So, I mean, if we sold something on the books as a fixed asset, we're going to say that the special had a cost of $50,000, so we would credit like equipment or something like that. This is going to be ugly for the $50,000. And then it had accumulated, is sold for $20,000, so we would have cash would go up. So I'm just going to say cash goes up by the $20,000. And then accumulated depreciation was on 35. It's got a credit balance. We're removing it. So we're going to debit the accumulated depreciation of the 35. ACC, I'm just going to say. And then the difference between those items is going to be the gain, which looks like $5,000. So you might want to jot down, anytime you have a journal entry, actually write down the journal entry. Will help you with the debits and credits. You might write it a little bit nicer than that, but if you write it down, that'll help you out. And then if we go to A, we're going to say that cash is going to be debited $20,000. You would think that would be done, so that's not it. B says a debit to accumulated depreciation of $35,000. That looks like something we're going to do, so that's not it. C says a credit to equipment of $50,000. That looks like right. And then, so D says a credit to other financing sources, and that doesn't seem right there. So it looks like D is going to be the item. So we're going to pick up D, final answer. Now we'll take a look at the next one. Similar question. Equipment acquired years ago by a special revenue fund at a cost of $50,000 is sold for $20,000 cash. Accumulated depreciation $35,000 exists. Journal entry in the special revenue fund includes what? So what's the difference here now? Same item, but we're in the special revenue fund. So we want to think on the government-wide activities, this item was recorded because it's a long-term asset. Therefore, it's on the books under the accrual basis, as is the case under government-wide activities. Under the special revenue fund, a governmental fund, one on a modified accrual basis, there is no asset on the books because they only have current assets. So this whole thing isn't going to be the case. That same transaction isn't going to be on the books in the same format for the special revenue fund. So of all these items, we're going to still have, however, the cash. Cash is going to be increased by the $20,000, but the credit isn't going to be going to the accumulated depreciation, equipment, or an expenditure. So therefore, the only item here that will be recorded in the special revenue fund will be A. Next question. Leased for a general capital asset is recorded in the governmental activities account at the start of the lease with either A, debit to a lease asset account, B, debit to a capital expense account, C, credit to lease obligation payable, or D, both debit to a lease asset account and credit to lease obligation payable are correct. Let's go through this again using the process of elimination. So we have a lease for a general capital asset is recorded in the governmental activities account at the start of the lease with what? So note what we want to think here is we got a lease, we have a capital asset, a lease of a capital asset. We're thinking it's probably going to be a capital lease then, in which we record it on the books, kind of like a purchase as opposed to an operating lease type of obligation. And we want to think, well, what account are we talking about? Are we talking about the government-wide activities, or are we talking about the funds? And in this case, we have the governmental activities, government-wide, on an accrual basis. Therefore, we would think that we were going to record this kind of similar as we would a capital asset. That being in mind, let's go through this one more time. So number A says debit to lease account. Now, when we think, first thing we want to think is like D, of course, says that two of these are correct, right? D says both debit a lease asset account and credit to the lease obligation payable. So therefore, if we think about the first one, debit to the lease asset, the second one says debit to the capital expense. That's not part of D. So if I didn't know at all, I'd probably say, well, it's not B, because you would think that the answer would be either this, that, or both of them, right? And so C says credit to the lease obligation payable, and then D says it's going to be both a debit to the lease asset account and a credit to the lease obligation payable account. So either the component A and C, or D, which has both of them, if we didn't know what else, would probably be the way to go. And of those, we're going to say D is actually going to be the correct answer. Both a debit to the lease asset, so we're going to put it on the books as an asset, and a credit to the lease obligation payable, kind of like recording the liability, right? If it's a capitalized lease, we're going to put the asset on the books, and we're going to record basically the liability, which is going to be the present value of the sum of the lease payments. Next question. Leased for a general capital asset is recorded in the general fund accounts at the start of the lease with either A, debit to the lease asset account, B, debit to the capital expenditure account, C, credit to the lease obligations payable, or D, both debit to lease asset account and credit to lease obligation payable are correct. Now this one, if we go through this again, same question, but what changed, now we're not in the government-wide activities, we're in the general fund. So whenever now we're going, okay, it's a fund, then you want to think, well, now are we on a modified accrual basis as opposed to the government-wide, which is on an accrual basis? Typically we are, because this is going to be a governmental fund, the main fund, general fund, governmental fund, therefore a modified accrual basis, therefore capital asset being a long-term asset, as well as the related liability being a long-term liability, not on modified accrual basis because they don't typically have long-term liabilities. So it's not going to be debit to the lease asset account because that's a long-term asset. It's not going to be in the fund accounting for the general fund modified accrual. Debit to a capital expenditure. Now, a capital expenditure, kind of like an expense possibly, right? And then C says credit to the lease obligation payable. That's going to be a long-term liability. That was the answer to the last one. So last one was D. So it's not going to be that. And then D says both debit to the lease asset and a credit to the lease obligation payable. So we don't have the lease obligation payable because it's a long-term liability, not on the modified accrual. Therefore, the final answer is going to be B, debit to a capital expenditure account, which is kind of like an expense account item because it's going to be in the modified accrual.